Now, going back to that 30%, if you earned 10,000 Rand a month, essentially what the banks would be looking at after tax, they'd be going, okay, 3,000 Rand a month as a serviceable amount of money to pay towards your debt. Now, if you do not have disposable income of 3,000 Rand, you'll either get turned down or they will offer you an amount less. So if you wanted R1 million but couldn't afford R1 million, they might come to you and say, well, you can qualify for 750,000. So you would have to find the other 250,000, and this is where the deposit comes in handy. Now, something you also want to look out for is your interest rates. At the moment, that is 10.5% as of today, the 15th of November 2016. But this amount goes up and down based on what the South African Reserve Bank decides is adequate in terms of charging people. Now, that's prime, but the bank might offer you a little bit more or a little bit less, depending on your credit profile. Now, there's 4 major credit profile companies in South Africa. Someone like TransUnion or XDS will be able to get you a figure, but essentially, you want to make sure out of 1,000 that you are anywhere from 650 and above. That means that you're going from very high risk to lower risk as we get forward to 1,000 Rand. These are the various factors that are going to help you. Of course, remember that when we're paying off our loan, of course, it's the capital and the interest. And if you look at what's called an amortization calculator, you can go Google it if you're in your browser, go and look at how interest is paid off. In the beginning of a loan, we're always paying off the interest first and then the capital. So make sure that the interest rate, your disposable income, and your capital amount and your term all work together to make sure that you can afford your purchase.